Trading Nut, episode 170.
And don't bet on end of the world scenarios, right? I see a lot of people are like, oh man, this is all going to shit. This is going to be, the worst stock market crash in history. Our dollar is not going to be worth anything. Oil is going to be $500 a barrel or whatever. If you bet on end of the world scenarios, if it plays out and you're right, who are you going to settle with, right? When the world ends.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind.
What's up, traders, and welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got Z, the traveling trader, in the house. Now, Z is a crypto and stock options trader. You're going to find out that he didn't really like the finance world when he started out, but how he got all the way through that and became a successful trader at the end of it. So that's coming up, as well as the video we shot after the show where he breaks down a simple little technique he uses to get in and out of the market before lunch. So you're going to see that over there on the YouTube channel. Links under the podcast description, or this there'll be a link at the end of this video if you want to check that out. Now, other things happening here at Trading Nut, and it is a busy time here at Trading Nut. There's so much going on. We've got the Trading Nut Funded Cup demo trading competition sponsored by City Traders Imperium. Registrations close at the end of this week, so don't wait. This is the time to get involved. Jump on board. It's looking like it's going to be a fantastic tournament. Guys, do go and check that out at tradingnut.com. There are links over there to register. Obviously, there's probably going to be a link under the video or in the description, so go and check those out as well. We got live streams galore happening here as well. We've got this week, we've got Brandon Abbas doing an Asian session live stream. We've got Master FX Shifu doing London, and we've got the team at Aerial FX doing New York. And they gave away $100 last time they were on. They're going to do it again, I believe. So if you want to go and check out one, go and check that out. I think it's probably launching the same time as this episode. So if you missed it, then they're going to come up again. So same with Master FX Shifu. He'll be on next week as well. So replays are up on the YouTube channel if you do want to see this. And these are streaming everywhere. So Facebook, Twitter, Twitch as well. So if you guys want to see it on one of these channels, then it's over there as well. Other things happening. We did number 3 of the Smart Money Concepts series. So that's up there on the YouTube channel. So go and check that out. If you're looking to get your mindset on point for the Trading Nut Funded Cup, then go and check out my Genius Trader Club with Andy Murphy. It is heavily discounted at the moment, so if you do want to pick it up at that discount, then now's the time to go and do it. Other things happening here, I did a live Q&A call with my Robot Builder Club members last week, so we covered things like Heikin-Ashi candles, automating them, obviously automating drawing fibs levels on the zigzag indicator, so using the zigzag indicator to draw fib levels, yes, it is possible, trailing stops, and a few other things, and that's just one of 20 odd live Q&A calls I've done with these guys. If you are looking to automate some or all of your trading, then go and check it out. The Robot Builders Club is still taking on members at the moment. All right, that's enough from me, guys. Let's hear from my sponsor, City Traders Imperium, before we get on with the show. Righty-ho, folks. I'd like to introduce you to something new here on the Trading Nut channel. It's the Trading Nut Funded Cup, sponsored by City Traders Imperium Funded Trader Program. You can win almost $200,000 worth of prizes. That's for the top 10 winners. And the top prize takes away a $100,000 funded account with City Traders Imperium. Folks, if you want to register for this and show your skills as a trader, click on the link above or the link below the video or in the podcast description. Then sign up for free before the 15th of April 2022 and get 10% off any City Traders Imperium funded challenge just for entering the competition. Good luck, folks, and we'll see you in the cup. All right, folks, here we are on Trading Up. We've got Z, the traveling trader, in the house, all the way over there from LA. Welcome to the show, Z.
Hey, what's going on? Thanks for having me, man.
Well, look, it's a pleasure getting you on. I know you've been around, started off in Bitcoin, of all things, on YouTube but I know that's not where your journey started. So I want to hear the full story. So back in, was it 2010? Like, how did you get started in trading, and how did you get to where you are now?
Yeah, I mean, it goes way earlier than 2010. Honestly, the first time that I was really exposed to trading in the stock market, I was a kid. And, you know, I used to be a video game head like most kids, and I was playing Nintendo. And I remember my dad, you know, just walking by and says, "Hey, do you know that I own a piece of Nintendo?" And I was like, "What do you mean, Pop? You don't work for Nintendo. What do you mean? You don't own Nintendo?" And he's like, "No, I own a piece of Nintendo." And I didn't quite get what he meant. And then he showed me this certificate that he had, which was basically a paper share. I'm dating myself now, but back in the day, you know, trading wasn't as electronic as it used to be today. And he showed me that he owned a share in Nintendo. And he's like, "Do you want one? Do you want a piece of Nintendo as well?" And I was like, "Yeah, of course." So he bought me a share of Nintendo. I can't even remember what it was at the time. It was probably in the single digits in terms of dollars. And then I was like, "Well, how do I know what this is worth?" And then he showed me the Wall Street Journal. He was like, "Well, every day this paper comes out with all of these, you know, the stock tickers and the prices of these stock tickers. And these are called quotes, and you can check them every day in the Wall Street Journal." So that was really where I was first exposed to trading, and I was fascinated by this. And I would check the price of stocks every single day, specifically the share price of Nintendo, because that's what I own. And then the second stock that I owned was Kellogg's, because I was, you know, also a little kid who was into eating cereal. So, you know, I think that was a really, you know, for parents, I'm not a parent, but for parents out there, if you want to expose your kids to the stock market, you know, get them invested in shares of things that they're into at the time, and they'll likely be more interested in it. But that's really where it started. And then fast forward, I majored in finance, but I happened to graduate at possibly the worst time ever, which was around the .com bust. So it was hard to find a job. I did end up finding a low-level job as a financial analyst in a small trading firm that I won't name at the moment, because we didn't really end up on a good foot, and I ended up leaving the company. I hated the finance world, at least what I was exposed to up until that point. You know, you had to basically work like a grunt, you know, get treated like the lowest person on the totem pole, put in, you know, endless amounts of hours doing grunt work for other people before you can even be respected. And I was like, no, this is not what I signed up for. I love finance. I just didn't like the finance world at the time.
And did you learn anything there? Was there anything that you sort of took away from that, from a, like, here's something I can leverage?
Yeah. I mean, you know, I did the Series 7, which, you know, at the time was basically my first exposure into options. I didn't trade options at the time, but, you know, I basically learned about derivatives. But it wasn't, you know, I would say that really with the advent of E-Trade, I think E-Trade was the first time that electronic trading really came across my radar, you know, along with most other people. Trading was definitely not the way that it is conducted today. Like, there was, at the time, most people were still calling up their bankers, putting in trades. You didn't have access to charts and you know, were able to execute trades on the fly. So, you know, I would say that there wasn't much in terms of what we do today that I learned back then, but certainly from a theoretical standpoint, I learned things that I didn't learn in finance school, like specifically what derivatives were, what drove the price of derivatives, et cetera. But yeah. And so then I decided to go to graduate school, ended up dropping out. Throughout school, I taught myself how to engineer, you know, basically software engineering, coding, C++. So ended up getting a job in software and, you know, trading basically on the side. In 2008, the financial crisis hit. That was the first time that I really had a little bit of money, because I had been working in software for a few years. I was also in a motorcycle accident, and I got, I think it was like a $60,000 settlement. So I ended up putting all the money that I had into the markets at the time, as the markets were crashing. And then 2010, when I was working a software job, a contract software job, there was a group of other people who were trading options on Thinkorswim, and they were also software developers. So we started this options trading group at work where we basically did very little work, did a lot of trading, and we would share ideas, backtest stuff. And it was really one of the most formative experiences I've ever had. And that's why I tell people, make sure that you get with communities that do the same thing that you do, because you learn from each other much quicker. You learn from each other's mistakes much, much quicker. You get to backtest stuff. You have a lot more data when you operate in groups. That's why I think now you see like Wall Street Bets, Discord groups, et cetera. Why those are so good for trading is because people have the most amount of information that we've ever had. And the retail trader has never really had that kind of information before, right?
So. Yeah. Hey, folks, with so many crypto exchanges to choose from, why not choose the best one for you? And here are 3 massive reasons why my sponsors Bitget are the perfect choice for traders. Number 1, they're ranked among the top 10 largest crypto exchanges for derivatives trading, which is pretty good, right? Number 2, they've got a trading competition that gives you a chance to win a heap of Bitcoin. So if you haven't got any Bitcoin, great way to get some. Number 3, the copy trading platform not only allows you to follow profitable traders, but you could earn crypto by letting others copy your trades too. So to get involved, click the link in the description below or in the card above, and then follow the 4 steps, and you're going to get $153 in rewards or up to $3,000 tether as a bonus. That's quite a unique situation. So you're literally getting paid to work at this company, but still doing, basically spending all your time back testing on the markets.
Yeah. I was not a very good employee, to say the least.
I've had jobs like that before as well, where I was in a team where I ended up literally teaching myself, because it was such a boring job, there was nothing to do. I taught myself HTML and then how to touch type, because obviously you can sit at the computer, and I think the internet had just come around at that point as well. Okay, so cool. So you ended up backtesting the stuff. How did you get into the actual trading of it, and do you remember placing your first trade, and how confident were you, and all that sort of stuff?
Yeah, well, I actually paper traded for 3 months before committing a single dollar to options. Like I said, at that time I had been investing, especially throughout the financial crisis of 08 and 09. But I hadn't really done any sort of day trading, swing trading, and certainly not any sort of derivatives trading. And the first time I applied for options trading on Thinkorswim, I was actually denied because I didn't answer the questions properly, or they didn't think I had enough experience. So I actually paper traded on Thinkorswim's platform for 3 months before committing a single dollar. And, no matter how much you paper trade, anyone that plays sports can relate to this. No matter how much you practice, when it's game time, it's a completely different scenario, right? Like your palms get sweaty. You're like, even though you've been practicing for a long time, you still kind of get hesitant when the scenario becomes real life and no longer practice, right? So, the first thing I did was, just like anyone else, bought calls and puts, and just saw the effects of that. And then you learn really quickly, if you dig really deep into options trading, that you can make consistent income doing things such as vertical spreads, iron condors, and whatnot. And over time, I learned those strategies. You're not going to learn everything on day one, but yeah.
And so I actually had an options trader on here recently, or a few months ago, and they were talking about how it was quite a nice way to get into shares. Obviously, finding a stock or that they want to invest in, and then buying the option on it. And obviously, if the option doesn't work out, they got the shares or the stocks. I would call them shares over here, and you get to invest in that company, and hopefully it goes up. Is that something you do on a regular basis, just out of interest?
No. So I rarely exercise the options. I'm sort of the typical options trader where I'm looking to leverage options, sort of these derivatives to gain more cash. I'm not looking to own the shares through the utilization of options. Now, every once in a blue moon, yeah, like if there's a stock like Tesla is a good example of this because it's a very expensive stock. When it does tank, I will sell a cash secured put. I don't know if your audience, a lot of your audience is familiar with options trading, but basically setting a price for what you're willing to pay for Tesla. So I will sell like the $500 cash secured put on Tesla. If Tesla never reaches $500, then you keep the money that you sold the put for. If Tesla hits $500 or below, then you're obligated to buy 100 shares of Tesla at $500, which most people would relish the opportunity to do. So once in a blue moon, I will do cash secured puts on stocks that I really want to own that have taken a beating. Otherwise, I'm really just looking to get out of those contracts for a cash gain as opposed to owning the shares.
Mm. And so how did you sort of migrate from, how did you've paper traded for 3 months, you've got in the markets, you're now starting to live trade. How did that go?
Yeah, I mean, there were bumps in the beginning for sure. I tell a famous story about how I basically I had done pretty well up to that, up to a certain point. Like initially there were obviously bumps and I was a losing trader, but then once I got the hang of it, and I learned some of these more complex strategies, I still was a novice, but I was making an okay amount of money, not enough to quit or anything. But I really took one on the chin one time where I executed a trade incorrectly. And this is sort of the danger with options is that if you're not on your P's and Q's, you can get smacked pretty hard. And I ended up opening, basically I wanted to do an iron condor position. I ended up opening more short calls than I had intended. And I went away for lunch and I had gone to Subway with some of my coworkers and I came back and I was down $30,000 just on a mistake. And I remember thinking to myself at that time, I think the cost of a Subway franchise was around $30,000 or $40,000. And that's where I had gone to for lunch. And I was like, man, the amount of money that I just lost, I could have bought a Subway franchise. And I lost $30,000 just going to get a sandwich, not paying attention to my trade, coming back and getting wiped out. So, there were definitely some bumps in the beginning. And that's why I advocate people, to paper trade as much as possible. These things we have endless amounts of resources now, whether it's YouTube or Google or, whatever, even your broker like TD Ameritrade or Charles Schwab will have education centers. Like there is no excuse not to learn this stuff before jumping head first. Right. So.
And how do you come back from a $30,000 loss? And was that a significant percentage of your account?
At the time, it was significant. Yeah. And you sort of get that lump in your throat, like an apple-sized lump in your throat. But here's the thing. I'm a believer that you sort of have to involve yourself in vehicles for human development, right? And what I mean by that is I'm into a lot of things. I have a lot of hobbies. I play a lot of sports. I love poker. I love motorcycle riding. And you can learn a lot of things from each of those disciplines. And from playing poker for a lot of years, you learn real quick not to get tilted. And, one bad loss, you're going to have to play tight and grind it out until you can get your bankroll back into a position where you can take bigger risks. And I learned that specifically through poker. And I try to take things that I learned from different things, whether it's boxing or basketball or poker or whatever. And I try to take those and use those as sort of parallel lessons with trading or with other things in life, right? So that mindset that I learned playing poker helped me a lot in terms of not getting tilted, as they call it in poker, meaning, basically ending up making bad decisions because you took one on the chin. And playing tight, grinding it out until I got my bankroll back to where it was supposed to be. Right. A lot of times you run the risk of sort of throwing your hands up in the air, giving up, making stupid decisions, trying to get that money back. But the strategy, should actually get tighter when something like that happens to you, not looser.
And just so to sort of, I suppose, give the guys who aren't options traders listening a view on it, how much of it is the options strategy you're applying? And I mean, there are obviously fixed strategies like the Iron Condor and other things versus reading the chart and being understand exactly what's going on from a price point of view.
Yeah, I'm a big believer in TA as well. I mean, TA is something that I've been sharpening since, I first executed a stock trade. Now there's no excuse. We have TradingView. Like I can't believe that, basically on a device, you can have the most advanced charting platform ever in your pocket. I wouldn't have imagined that when I was in finance school and we had a little Bloomberg terminal in the corner of the classroom that everyone had to wait to get on, basically. And the charting wasn't even that great. And then, you had Yahoo charts, which were so rudimentary compared to what you have now with TradingView, which with the free account, you can add indicators and, whatever you want. Any time frame you like, you can zoom in, zoom out. It's so robust. But it all begins with the chart for me. Even with options trading, I'm checking levels on the chart. And I'm sure we'll get into some more specifics later. But yeah, it all starts with the chart. I'm not executing options trades blindly, right? Like the chart is what dictates whether the momentum is going in a certain direction. And it will also dictate the levels at which there is support and resistance. And then I design trades around that data.
Awesome. And so, okay, so you've taken a big loss. You obviously get back to the point where you've grown this account, and I assume there's a time when you decide I'm ready to leave my job. Is that right?
Yeah, it wasn't. I mean, yeah, like we were saying before the call started, a lot of people look at your position now, whether it's how many subscribers you've amassed on YouTube, whether it's the fact that you trade as opposed to working. And it's very easy to get jaded by that and think that, that position has come easily. It took years between when I first started trading and now, right? I mean, we're talking about at this point, 14 years since 2008 and 12 years since 2010. So, it took a very long time before that happened. So it wasn't like an immediate thing. It was only a few years ago that I stopped working, right? So yeah, I mean, you have to fall in love with the process and don't look at someone's finished product. Talk to them about the grind that it took to get them there. Talk to them about, their losses and talk to them about, for instance, like with YouTube, how many days you spend making videos, editing videos, releasing them and nobody watching, and how easy it is to get disheartened and discouraged by that. Right. But there's something that forces you to keep on going. And that's the difference between those that make it and those that stop.
Yeah, I suppose that's, and it comes up every second episode. It seems to come up. Just don't give up. Just carry on. You've got to take the hit and move on to the next day. Start again. Okay, so you obviously transition into crypto, which seems sort of like quite different from options. I mean, how on earth do you make that switch?
Yeah, it wasn't really a switch. It was more like an addition. You end up becoming sort of a degenerate, after being exposed to so many different types of derivatives. I tried Forex for a while. It wasn't for me. I felt like there was too much of a time commitment and capital commitment to make gains that I could make with much less time and much less capital through options. The thing that really interested me about crypto, one, was the concept of Bitcoin as money, which I'm sure a lot of people can agree with, especially if you're critical of, the central bank system that we have in Western countries. the fact that our currency isn't really backed by anything anymore. So there was the idea was what I fell in love with first. And then from a trading perspective, the crypto market's open 24/7. So what better way for a degenerate to spend their weekend when the options market is closed than to trade crypto, right? But at that time, like 2016, 2017, it was also sort of like a fraternity, sorority sort of thing where, people that were involved in crypto, it was a small community and there was sort of pride in that as well. So yeah, there were a few things that really attracted me to it at the time. And then, like I said, from a trading perspective, it was, 24/7. So, yeah.
And you obviously went through from that, back in 2015, 2016, don't even know what Bitcoin was back then, but I'm guessing it was like below 10,000. You obviously went through that.
It was below 1,000.
Below 1,000. Ah.
It wasn't below 10,000.
Yeah. Below 10,000 and also below 1,000. So how did you? Did you sort of foresee the initial spike to 20 and then where it's got to in the past year?
No, definitely no. Definitely did not foresee the spike to 20. But I did foresee. I don't want to sound like an oracle, but I did think that we would get above 20 once we hit the 20 threshold. The path from 20 to 65 is not that drastic. The path from less than a penny to 20,000 is historical, is monumental, right? That's never happened with anything.
Yeah.
So yeah, it was much easier to believe that Bitcoin can go from 20 to 60 or 65 than, from below a penny to 20K. I definitely didn't foresee going to 20K. I remember buying Bitcoin when it was below 1,000 and people calling me crazy at the time. And then once it hit 2,000, I'm like, look, I'm a genius. I doubled my money. But for sure, I didn't foresee it hitting 20K. That run in December 2017 was insane.
And have you got any horror stories around if only I'd done this and because you're obviously active in it before 1,000. Did you manage to hold any that, if you're willing to divulge?
Yeah. With Bitcoin, I came at a good time because, look, it's very easy to criticize someone who, had Bitcoin when it was worth a penny or whatever, and then sold it when it was $1, right? And they're like, oh, I just 10x my money. It's very easy to criticize that person, but put yourself in that person's shoes. Right? Like you're talking about this internet funny money at the time. We're talking about, when it was first introduced, nobody thought that they could 10x their money. And there was hardly anything called an exchange at that time. Right. So it's very easy to criticize someone like that. Like, oh, you're an idiot. How didn't you know that it would go to 20K? But for me, I sort of came in at the right time because Bitcoin had hit these astronomical heights close to $1,000. So it was definitely gaining some serious credibility, and it was a lot easier for me to hold or trade at those levels than someone who bought it at a penny and was tempted to sell it at $1, right? At that point, you 100x your money if you bought it at a penny and sold it at $1, right? So yeah, I don't have any crypto horror stories, to be honest. It wasn't. It wasn't really, maybe it was just timing. Maybe I would have, if I came in earlier, I would have been, instead of the Bitcoin pizza guy, maybe I would have been the Bitcoin burger guy. I don't know. But yeah, no, I don't have any crypto horror stories, to be honest. Now, there are certain things where people have put altcoins on my radar and I have ignored them, only to find out that, oh, I would have made $100 million if I just put in 5K like someone told me to. You know what I mean? Yeah. So definitely there are missed opportunities with altcoins, but that's like,
it is what it is, isn't it? It's like, nobody's a crystal ball. Now, what about transitioning from a charting point of view to crypto? Did you have to do anything different, or was it pretty seamless?
Yeah, the chart is basically the same. The only thing with crypto is everything is accelerated. So for instance, with stocks, you define a bear market by a drawdown of 20% or more, right? That's just like a Tuesday night for Bitcoin. So it's like, trying to define whether something is in a bear market or not, you cannot use the same definitions that you would in stocks for crypto trading. The charts themselves, the patterns, all that stuff, they are transitional, or I guess relatable, but the moves are way more violent, and you have to be conscious of that, right? And you cannot, because it's a 24/7 market, you can't leave big leverage positions open either, right? And go to sleep comfortably.
And so I suppose you've probably had to like enact, moving from this options world where you've got obviously points where you get out, but you obviously had to get it's straight. There's no option. It's you're in and you're out. How's your sort of risk to reward look like on a crypto trade?
Well, what do you mean in terms
of like your stop loss versus your take profit? I mean, what's the difference in size?
Right. That's a good question. It is all relative. It really is based on what's going on the chart, to be honest. But you do have to allow yourself a lot more leeway in crypto. And then because the Gini coefficient with crypto is so bad, the Gini coefficient is basically how distributed is that asset, right? And Bitcoin has one of the worst Gini coefficients of any asset on planet Earth, meaning that only a handful of people own most of it. So it's very easy to manipulate Bitcoin. You see that all the time, right? It's so easy, especially with the introduction of Bitcoin futures. It's so easy to manipulate Bitcoin. Like if I was a Bitcoin whale and I owned billions of dollars worth of Bitcoin, and there's a handful of people that are in that position, you can easily short Bitcoin on the futures market, right? Dump your Bitcoin on the open market, tank the price of Bitcoin, bank on those futures contracts, and then buy back Bitcoin at a discount. That stuff was happening a lot, especially with the introduction of Bitcoin futures in 2018. So, it's very easy to get wicked out on crypto, which is why I don't trade it anymore in an active manner. I still buy it. I still, buy dips on major crypto assets. I'll trade it every once in a blue moon, but I'm not active like I was, back in the day where I was constantly trading it in and out.
Cool. One thing that's quite interesting, what you said earlier, which was around the time factor with stock options versus Forex, and I suppose versus Bitcoin as well, which you've now got experience in. How do you sort of define can you talk us through the difference between the time you had to spend on Forex, the time you had to spend in options, and you're like going, well, this makes more sense. I can make more money and spend less time. Why would I not do this? Can you explain that? Because a lot of the guys watching will be Forex traders and probably quite interested in this.
Yeah. Well, Forex, obviously Forex, the tick moves, right? They're very incremental. And unless you're using some sort of leverage, you have to commit a lot of capital to make a significant amount of money, right? Because you're imagining that these currencies are moving cents at a time. So you really have to put in, unless you're trading like futures on Forex, which that's not what I'm not talking about derivatives here. I'm just talking about Forex itself. You really have to commit a lot of money in order to make a significant amount. And, from my experience, you have to spend a lot of time in front of the screen. Whereas with an option, options are leveraged instruments where, they can make hundreds of percentage point moves in, an hour or two, sometimes in a few minutes. It really depends on what the implied volatility looks like. But once you learn the mechanics of how options are priced, and you can spot, options on stocks that have high implied volatility, like a good example would be like GameStop or AMC. You can really make significant amount of money with a much less capital commitment, because remember that each option, gives you the right to control 100 shares of stock. So by nature, it's a leveraged instrument. So unless you're trading a derivative on Forex, like if you're trading dollar futures or something, which are leveraged as well, you have to commit a lot of money in order to make incremental gain in Forex. And for me, the time commitment wasn't that. It was just kind of like diminishing returns for me.
Okay, I'm going to educate you on this one. So I don't know when you looked at the Forex market, but things have obviously advanced from here because it's you can get, everyone's offering leverage up to like 1,000 to 1 leverage. So you can now start off with very little, in fact, and get massive leverage on that. And so whenever you joined it, it must have been, or whatever broker it was, it must have been, they must have been going, oh, we're not going to give them any leverage on this one, because it's now you can get in with like very little money and have massive leverage if you want. So sorry, misunderstanding. I was saying, like, if you're not trading a leverage product in Forex. Right? Okay, yeah. So most people now trade with the leverage. Yeah, it's almost like you can't even. I mean, I know they've cut it down in some countries, but it's very hard to even not trade with leverage in Forex. Funnily enough.
Yeah. But and then at some point it's like, how many things are you trading? Like, how many plates are you spinning, right? Yeah. So it's like, if you're trying to keep track of your stock portfolio, you're also trading options, you're trading futures, you introduce crypto, it's like, how many things can you do, right? So it's like, for me, the one that I had the least experience with and the one that was least attractive to me was Forex.
And how do you whittle down those stocks that you're, there's obviously thousands of stocks. How do you whittle them down to find the ones that you're going to trade?
Well, really, you can make a living so with options trading, your bread and butter is made with liquidity, right? If you're trading options that are illiquid, they have a very wide bid-ask spread, which already prices you out of a trade, right? So say the bid-ask spread is a 20% difference, meaning that the ask price, if you bought an option at the ask price and then you sold it at the bid price immediately, you're already down an automatic 20%, right? You definitely don't want to trade those types of options. You want to trade very liquid options where the bid-ask spread is very narrow. And usually those stocks are not hard to find. I mean, I'm sure you can guess what they would be, right? So you have the index options like the SPY, which is based on the S&P 500, the triple Qs based on the NASDAQ, and then you have Tesla, Apple, Facebook, NEO, et cetera, right? Like the popular stocks. You can make your bread and butter trading only index options. And as a matter of fact, there are a lot of options traders that only trade index options, right? They'll only trade the SPY or the Qs. So it's not hard to find options that you want to trade. And then now you have, unusual whales, you have cheddar flow. These are tools that help you find options flows, right? Like I said, the retail trader now has more tools at their disposal than ever before. So using these tools, you can already find options that are liquid. It will, it's populating all day. And I can show you a screenshot of it, but it's populating all day showing you what are the most liquid options. And you can literally then take that information and say, oh shit, there's a zillion contracts traded on Facebook today. Let me go to Facebook's chart and see what it looks like and maybe design an options trade around what is going on with the chart. So it's very easy nowadays to find tickers to trade. It's all based on liquidity. And like I said, I mean, you could stick to the same ones every single day if you wanted to.
Now, what does your typical trading day actually look like?
So my trading day actually starts before the market opens because, especially now during this time where we have epic volatility due to a lot of the macroeconomic issues going on. 2022 has certainly been a very volatile market, especially with Fed policy changing significantly this year. I've been day trading a lot more than I used to. So 2020, 2021, it was so bullish that, and I think somebody experimented with this, but you could have easily had a monkey with a dartboard, picking ticker symbols.
Right.
and everything was going up, literally everything, right? Like you could think of, any meme stock or high beta stock. I mean, what QuantumScape was trading at like 160, Zoom was trading at what, $500. Just insane valuations. I don't even remember what Roku's price was, but it was insane. Shopify was trading at, over $1,200. So, it was very easy to just maintain a bullish sentiment and say, open up a bunch of bullish call spreads, or even just buy outright calls. And, really just make your bread and butter that way in the bull market. Nowadays, it's so volatile that you cannot get by with that type of strategy. So I wake up in the morning about an hour before the market opens, and I'm on the West Coast, so that is pretty brutal here. It's about 5:30 a.m. And I'll draw my levels pre-market on Thinkorswim, right? I'll be tracking the pre-market levels on the ticker symbols that I want to trade options on, and I'm basically looking for flushes or breakouts. And I can share my screen and we can go over what that looks like in specifics if you want later. But I essentially draw those levels and I, map it out, and I have a list of tickers and the levels for each of those tickers. And if it crosses above a certain resistance level, then I'm buying calls, right? Which is a bullish bet, basically. If it goes below a support level, then I'm buying puts, which is a bearish bet. And that is basically how I start my trading day. And then throughout the trading day, I'm looking at things like earnings. I'm looking at sentiment. I'm looking at macroeconomic factors. If I think there will be a bump in oil, then I might look at oil's chart and see if I can design an options trade around that. It's very, aside from the pre-market planning, what happens throughout the day is very haphazard. It's not as pretty as, people always ask, share your strategy. Well, after the bell rings and I enter my day trades, I generally don't day trade after a couple of hours when the market opens. You get the most volatility at market open and at market close. What happens in between is a lot of sideways trading, which is not good for day trading. So those in between hours is really when I'm really scatterbrained. Like I have CNBC going on one screen. I got TD Ameritrade going on the other screen. I'm reading articles about what Jerome Powell just said. What's going on right now with the geopolitical issues in Russia, Ukraine, how that might affect oil prices, whatnot. So it's just spinning plates all day, trying to find swing setups aside from the day trades that I open in the morning. So yeah, it's a very hectic way of making money, but I wouldn't trade it for anything else.
Right. And so what do you think made you different from everyone else out there who's like struggling to make this work in the beginning? Have you got any traits or anything like that, do you think, that made you find success?
Yeah. I always tell people that there is not a substitute for building a quality long-term portfolio, right? Like when I look at some of the cost bases of some stocks that I bought in 08, 09, it just, like, even me brings tears to my eyes. Like, oh man, I wish I had more money and I bought more Apple or, more Amazon at the time. So, in my view, building a long-term portfolio alongside whatever you're doing is a must. Whether you utilize a basic dollar cost averaging strategy, where if you have a paycheck, you're putting a certain amount every month into high quality stocks or indexes. And then alongside that, implementing a strategy that conforms to the time that you have, right? You can't be a day trader if you're stuck at work all day. You just can't. Now you can practice on the weekends, after hours, you can back test, you can practice. But it has to conform with the lifestyle that you have currently. So, if it's swing trading, then learn everything about swing trading and the difference between swing trading and day trading. Day trading, obviously, you're making trades in and out all day. And swing trading is holding a position for a few days to a few weeks. So trade alongside what conforms to your lifestyle and your timing availability. I think what makes me different, what makes our community different than others that I've seen, and I'm not saying that I'm the only one that does this, but certainly I would say that it stands out is that I wake up every day neutral, right? And I am equipped with the tools that allow me to take either really any directional position, right? If all you know how to do is buy stocks, then the market needs to be bullish for you to make money, plain and simple. That's it, right? If you know how to set up neutral strategies, bearish strategies, bullish strategies, hedges, etc., then you are equipped with a much heavier toolbox that allows you to survive during times like this, right? And there's nothing wrong with just buying and holding. Trust me. Like, the American stock market is the most resilient market in human history. But yeah, being able to play any direction, even a neutral sentiment, is, I think, what separates us from a lot of traders, for sure.
And so thinking about, I mean, you've touched on a couple of mindset things here in the show. I mean, have you got anything that you've had to sort of overcome with your own trading, and have you got any advice for guys around getting their mindset right?
Right. Guys and girls, by the way.
Yeah,
20%. No, I'm saying that because 20% of our YouTube audience, I look at the analytics all the time, is made up of females, and that's something that I'm proud of. And we have a lot of strong female traders in our Discord community, for sure. But yes, one thing that I would say is don't intermix your long-term positions and short-term ones. This is one of the most endemic problems that I see is, you have your trading account, whether it's Robinhood or whatever, and you are the problem that I see a lot of newbies make, and even experience, and even I've made this, and to this day still sometimes struggle with it, is you convince yourself that you're buying something for the long term, right? Like, you have conviction in this company, you like its valuation, you've taken a hard look at its balance sheet, income statement, at its guidance, etc., and you're like, okay, this is a company that I'm gonna put my Warren Buffett hat on and take a position in, right? Shit happens, market takes a turn, whatever. You have your long-term positions alongside your short-term ones, and they're kind of all in this mixed bag. And now you're looking at your long-term positions, but you're inclined to make short-term decisions based on what's going on in the market now. So you might look at a stock position that you still believe in long-term, but because of where the market is now, you sort of lose confidence. And you're like, fuck it, I'm just going to sell everything. And it's very easy to apply short-term sentiment to your long-term position. So I would say one of the things that helped me the most is opening up separate accounts. And this is easy to do if you're on an established broker like TD Ameritrade or Fidelity or Charles Schwab. You have your umbrella account, and then you can have, multiple accounts under that. So I have a long-term account that I try not to look at every day, and then a short-term account. That way I'm not intermixing my short-term sentiment on my long-term positions, right?
Yeah.
So I would say that is one of the biggest problems that I see. And then for sure, plan your trades, trade your plan. I mean, that's much easier said than done. But before you click on the buy button, why are you doing that? Ask yourself that. Why am I doing this? Like, say it out loud. Why am I doing this? Right? Do you know what that price represents? Is it a good entry? If it's a good entry, why? When are you planning on exiting? Is this a long-term position, a short-term position? If you're planning on exiting, where's your stop limit? What is that in relation to where you think your profit taking is? I don't think enough people do that. I think that they, might listen to YouTube videos or read stuff on Wall Street Bets, and they just are clicking buy all day long because they feel like activity equals productivity, and it doesn't. Activity does not equal productivity. A lot of times the most productive thing you could do is sit out, right? If you cannot find a good reason for entering a trade, the best thing to do and the easiest way to make money is to sit out, right? You can make money or hedge at least by sitting out. Cash is also a position. Cash is not, frivolous. Yeah. It's worth something.
Yeah. Well, it's, back to what you're saying with poker. I mean, if you've got a bad hand, might pay, and you're not paying the stake, then you might just sit out, right? You just go, I'll wait till the next one comes along.
Exactly. And the last thing I'll say is, in terms of mindset, is, don't trying to time the bottom is one of the worst ways to invest. And I'm seeing it now. Like, I'm sure you're paying attention to the markets now. We've had a nice relief rally over the last week and a half. So many people are like, oh shit, Tesla was under 700 just less than a month ago, and now it's over 1,000 again. Why didn't I buy it? I was waiting for it to get to 600. And it's like, mate, if you weren't going to buy it at 700, trust me, you're not going to buy it at 600. Right. So waiting for the absolute bottom, that's never going to happen. And you have to come to grips with that.
Yeah.
Right. You have to come to terms with that you will never catch the absolute bottom and you will never sell the absolute top. Instead, look at the company itself. Does the price point it's currently at represent something valuable to you? Right. And don't bet on end of the world scenarios. Right. I see a lot of people are like, oh man, this is all going to shit. This is going to be, the worst stock market crash in history. Our dollar is not going to be worth anything. Oil is going to be $500 a barrel or whatever. If you bet on end of the world scenarios, if it plays out and you're right, who are you going to settle with, right? When the world ends.
Exactly.
I think Art Cashin, the legendary Art Cashin, said that, right? He's like, don't bet on end of the world scenarios because if the world ends, who are you going to settle with? So,
that's two great pieces of advice. That's fantastic. Now, if there was one thing you'd recommend any retail trader spend the next month mastering, what would it be?
I would say from a chart perspective, support and resistance is hands down the most valuable thing that you can spot, right? And there are a number of ways. There are endless number of ways to determine support and resistance. You can use Fibonacci levels, moving averages, whatever. But if you can draw a line at support and draw a line at resistance, you're already halfway there, right? So determining support and resistance, time frame. Make sure that you're looking at a time frame that conforms to what you're trading. I see a lot of traders looking at a 5-minute chart for long-term investing. And I'm like, what are you doing? Or they'll look at a daily chart for day trading when they should be looking at an intraday chart. Know why you're looking at that specific time frame. So support and resistance time frame. And then, learning chart patterns for sure. I think that's a work in progress that, you will be grinding at every single day. But, spend 15, 30 minutes a day on charting, and you don't have to do it during market hours. You can look at what a stock did throughout the day and try to determine where was support and resistance. But like I said, we have endless tools at our disposal, so there's no excuse. But chart at least 15 to 30 minutes a day, just like, playing guitar or shooting hoops or, penalty kicks or whatever. It's a sport. It's a sport.
Cool. Right, we're going to wrap up here with some quick fire questions, then end the show. So start off with, how long did it take you to go from newbie to consistently profitable?
I would say with options, I'll answer this with options trading because, again, like I started investing in '08, so I came in at the right time. I had a little bit of money at the time. I was single, no commitments, whatever. So, I made money investing pretty quickly. But in terms of trading, I would say 2 years before I was comfortable with being profitable on a week-to-week basis.
What's your favorite entry setup?
My favorite entry setup is trading flushes in the morning, which is a day trading strategy. But basically, if you see a stock or an index have a nice run-up pre-market, that is usually institutional investors pumping that up because retail traders don't trade pre-market. Once the market opens, they tend to dump their positions on retail, and those flushes become easier to read. So, once you look at enough pre-market charts and you see that there's a nice vertical run-up, you can draw a line at support and try to play the breakdown of that support level by buying puts or shorting the stock or shorting the index or whatever. But those are, when I see those, I salivate. Like, those are my favorite setups for sure.
And what about strategies for exiting or managing your trades?
If I'm not actively looking at a chart, and I have to step away, I generally set my day trades at no more than 15% stop limit, right? and learn how to use bracket orders too. So in advanced platforms like Thinkorswim, you can basically set up like an OCO or a bracket order where your stop limit is at minus 15% and your take profit might be at plus 15% or whatever your target is. But learn how to use bracket orders. If you're going to step away, don't, especially if you're trading options, don't step away without a stop limit. Otherwise, you can manually manage it. Even if your position is over 15% down, as long as the setup is still valid, I will remain in the position if I'm in front of my screen to monitor it.
And what about a recommended trading book or resource?
Trading book, the Bible is Technical Analysis of the Financial Markets by John J. Murphy. However, I do think there are much better ways to learn than books. I think that TradingView and YouTube are probably your best sources. Open up a free TradingView account. Don't get the paid one. Just open up a free one if you're a newbie and start Googling just how to do technical analysis on YouTube, or, how to draw support and resistance, and try to apply what you see on to your chart in TradingView.
What's your preferred broker and trading platform?
Thinkorswim for sure. I've been with them since 2010, so for sure Thinkorswim.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. And if you could leave our listeners with one piece of advice, what would it be?
With one piece of advice is, yeah, I would think that, I would say that if you're going to take anything away from this, before you click the buy button, know exactly why you're doing it and say it out loud. Why am I doing this? And that's going to help you. I think it will progress your trading exponentially if every time you do that, you ask yourself that question out loud. And it might sound stupid at first, but trust me, it's going to save your ass more often than not.
Cool. And before we wrap up, what's the best way for the guys to get a hold of you?
Yeah, so on YouTube, you can search the Traveling Trader. And, if you go to any of my videos, you'll see below the videos, you'll see the link to my Instagram and my Twitter. But basically, yeah, the best way is if you go to the Traveling Trader on YouTube, go to my YouTube channel, and you'll see below any video the links to all my socials.
Brilliant. Well, look, a big thank you to Z for sharing with us today everything we've discussed here, along with all those links are going to be in the show notes. To find them, simply search for, I'm guessing it's probably going to be the Traveling Trader or Z in the search box on tradingnut.com. Until next time, I wish all my listeners trading happiness and success.
Appreciate it, brother. Stay safe out there, traders. Peace.
All right, folks, so there you have an interview with Z done and dusted. Do remember we did shoot a video after this where you can find out a little strategy that's going to get you in and out before lunchtime. It's called The Flush. So head over to the YouTube channel over there on Trading Nut and you'll find it over there. Now, I'm going to tell you a few other things and then I'm going to wrap up with a little story from my weekend. So hold on for that if you really want to hear something interesting. Now, other things going on here. We've got that Trading Nut Funded Cup registrations ending. We've got all those live streams, which you can probably catch the replay of this week, or if you lucky enough, you'll be able to catch one of them live or catch them live next week. Other things, the Genius Trader Club doors are open for that, and it's at a massive discount at the moment. If you want to get your mindset on point for that Trading Nut Funded Cup, then that could be the place to go and get it sorted. Robot Builders Club as well, and they are taking EAs or robots on the Trading Nut Funded Cup as well. So if you're looking to build your own or learn how to build trading robots, then head over to my Robot Builders Club, and that's what I'll teach you how to do. Right, guys, now this little story. So the weekend that's just been, I went away on a 3-day little trip with some friends. It's a regular thing that we do, and we play golf. They all love golf. For whatever reason, my golf is just absolutely terrible. I'm getting worse and worse and worse. And when I was playing, I lost the plot. I completely had that tilt, as I found out, that tilt moment where club went, the bag was kicked, the trundler was almost thrown, I didn't quite throw it. And I said to my mate who organises the whole thing, I said, like, and he's a really good golfer, I said, that's it, I'm done, I'm quitting golf. I'm over this. I just couldn't hit anything. And he panicked because he was thinking, hang on a sec, Cam's going to, that's it, he's done. I don't want him to not turn up to another tournament. So he goes, right, let me give you some tips and pointers. So he gave me like a quick 3-minute session, and I was like, I'm not going to remember all this stuff. And anyway, next shot, I tried what he taught me. Next, probably 25 shots, if not 40, because there were a lot of shots. I tried what he taught me, and it just got worse and worse. It got worse and worse. Now, what did it remind me of around trading? It reminded me of the tilt. So losing the plot. Absolutely losing the plot based on what has happened in the past. That's not good. That's not good. So that's like completely destroying your account. The other one is changing your strategy, changing your swing, changing your strategy. Don't do it. Just keep improving what you've got. Add something to what you've got. Don't completely change it. Strategy hopping, another one. I'm sure there were some other ones in there around just the way I was approaching it. By the end of it, I had a couple of good shots, and I made a slight improvement to what I was originally doing, and I actually feel pretty confident about next time I'm going to go out. But I thought I'd leave that with you guys, and somebody actually said it in the Genius Trader chat. They said that they were going to go out to play golf, and they said it is very similar to trading. And I've got to say, it is very similar to trading on a number of different aspects, and that the more you sort of try and relate it back, the more you'll go, oh yeah, it is very similar. All right, guys, that's it from me. Hope you enjoyed the show. Hope you enjoyed that little story at the end, and we'll see you in the next one.